Hey, how's it going? This is Jair, a real estate agent. In this short video, I'm going to tell you what happens, when you get notified. You know what? You're looking at houses, submit an offer, say, "Bye, congratulations, you're the winning bid. You got the offer. Your house is, you're in escrow right now." What they say. What happens next? A lot of people don't realize what happens next. What are the process? So just to summarize, in this video, I'm going to tell you what happens after your offer gets accepted. What are the steps that you have to do when it comes to deposit, inspections, and checking out the property records? And also, what are the windows that you have to cancel? Take into account, give me an example. If you have a house, and let's say this house worth, 800,000. So you have to put on deposit when you get notified escrow, your offer's getting accepted, roughly about 1%. So we're looking at about $8,000. That's your deposit. So first step, you have 3 days to get those $8,000 from your bank account to escrow. Sure, you submitted your $8,000 deposit, and a lot of people don't think about that. This money is in jeopardy. So whenever you put a deposit, you send it into escrow. There's the buyer, there's the seller, and there's escrow. So escrow is holding your money. The reason you're holding your money because as a buyer, you have 3 windows to inspect the property. When you get a property into escrow, you're buying it, but you're buying the right to be able to check the property for a window of time, be able to check the property for a window of time, and just to make sure the property is correct. All right. So first step, within the first 7 days, you get anything about the property history. So you get information about the property history, whether the property, there's been a fire on the property, whether there's been a water claim, whether someone has passed away at the property. So all that information and anything that the seller did as far as renovations or so on, whether it was with the contractor or whether it was the handyman, you will get that information. That gives you the opportunity for you to say, you know what, I review the information and I don't think, based on the property history, consider this as like a Carfax when you buy a vehicle. It will let you know if the vehicle was in a flood, it was in a collision or so on, something happened. If you or your agent determine, what, based on, let's say someone passed away at the property. All right, you know what? I don't think the right property for me. Well, you can send your cancellation, and you get your $8,000 back. All right, fair enough. And you go look for another property. Second window. Second window is inspections. And I'm going to move this screen real quick. We're looking at the second window, which is inspections. So at that point, more than likely, you're going to spend $500 for a home inspection, and maybe, let's say, $100 for an electrical. So you make an inspection, they do reports and so on. They say, oh, you know what, there was a damage here on the property. Something was wrong with the foundation. There's all electrical needs to be replaced. And at that point, you think, you know what, there's a lot of work to me. Even if I ask the seller to give me some money or make some repairs, there's just simply a lot of work for you to consider, and this is not the right property for you. All right, so at that point, you send your cancellation, and you get your $8,000 back. Take into account, if you spend money, $500 on a home inspection, that is non-refundable. That is the cost of doing business. That is the cost of, if you are buying a vehicle, going back to that. If you're buying a vehicle, you take it to the mechanic, and the mechanic tells you, you know what, I wouldn't buy this car. It's the same thing. You spend $500 to be able to make sure that you didn't spend $50,000 on something that wasn't going to be good for you. So whatever inspections that money that you spent, that money is non-refundable. If you were to go to a net's house and happen to do the same, it's the same thing. All right, so that is the second window. When it comes to the third window, remember, there were 7 days for the history of the property. There were 17 days for the inspections. And then now, within that, you have 21 days for your bank is going to be able to do an appraisal on a property. So the property has to appraise. If you're selling for 800,000, the bank's going to check that if it's value 800,000. If for some reason its value comes up at 790, well, at that point, either the seller says, you know what, I'm gonna reduce the price minus 10,000, so we'll accommodate the value, and you're good to go. And if the seller says, you know what, I'm not gonna reduce the price, you come up with the difference, and that's something you want to do, you simply send your cancellation letter, and you get your $8,000 back. Take into account this appraisal is gonna cost you $500. You're not gonna get it back. So at this point, you probably spend $500 on inspections and $500 on appraisal. So you already spent $1,000 and you haven't gotten any home. That's why it's important whenever you look at properties that you do go for the home that you really like, because you're going to spend money on it. There could be a possibility that you might not, if something's wrong with the property, you have to walk away. If that's the case, make it for the property that you're really interested. All right. So again, 7 days. That's for history. If you don't like the property history or something passed away, you can cancel and take your money back. Then 17 days for inspections. If for some reason something wrong with the property, nothing, nothing that satisfies you, you can cancel and take your money back. And then the appraisal. It's roughly about 21 days or a little something 17. If a property appraises is good. If it doesn't appraise, you can cancel and take money back. Then the last one is the loan. During this time that you're doing the inspections, appraisal, reviews with your real estate agent, the bank or loan officer is doing all your paperwork, income, verifying, employment, checking your last deposits, credit, and so on. They have 21 days to go from a pre-approval to a full approval. If at this point your bank says, you know what, we already checked your history is good, inspections are good, appraisal is good, loan is good, so you're good. Your bank says you're pre-approval, you're good. You're pretty much 10 days from closing. At that point, your agent is going to say, you know what, we need to sign the form that protects you, which is the last protection. First protection was disclosures. Second protection was inspections. Third protection was appraisal. And the last protection, along with appraisal, is the loan. Once you sign this form, which is called the contingency removal, once you sign it, because the seller is going to say, okay, you already checked the property disclosures, you're good. You already checked the inspections, nothing wrong with the house, or we're giving you credit. Property already appraised to the value, and your lender already communicated that loan approval is already done. So at that point, you sign this. It is important to know that once you sign this form, your deposit, it's actually moved to the other side, to the seller, because you're getting close closing. If you change your mind after you sign this form, which is maybe day 22, you say, you know what, I changed my mind. I don't want the property anymore. Well, you know what? You're out $8,000. Your deposit it stays with escrow, and since the way it seems that if money comes to us, it will stay with the seller, because the seller took the property off the market for you to check, for disclosure, do inspections, to do an appraisal, to do a loan. And if you decide not to buy, that's when your deposit is in jeopardy. So take into account, once you sign this form, if you change jobs, change your mind, or decided not to buy the property, your deposit is no longer yours. So it is important to know in all this that whenever you're going to buy a property, that one, you do like it, the property feels like an 8 or a 9 to you, that the agent will give you information about the history, as much history they can know about the property, and when it comes to doing the inspection, to let you know, like, you know what, these are critical, these are not critical. There's, the property is, 90% in good condition, and the other 10% is just cosmetic. That's good. And when it comes to the value of the property, that the agent already tells you, what, before we submit an offer, I check the comparables, and that more than likely the value will be good. Because at the end of the day, you as the buyer, you're the one who's running all the risks. You're spending $500 on inspection, or any other inspection. You're spending $500 on appraisal, and you put in a deposit, let's say in this case $8,000. So if for some reason you end up not buying the property, you're already out $9,000, and you didn't get a house. So this is the purpose of home inspection, of a buyer presentation. The buyer presentation is going to let you know what are the windows that you can get out and take your money. And if you decide, that's not for you, what are the challenges? Why is it important that from a realtor plus your lender that there's good communication, because the realtor is the one responsible for the transaction. The lender is responsible for the money. So I, as a realtor, always have a conversation with lenders. You know what? Did you check everything pre-approval? How's this file? Is this file is it a strong file? Is it not so strong file? What are the things we need to work on? Do we need closing costs? Do we need to ask for more time? So the communication is to be key in order to make sure at the end of the day you use the deposit towards your house and you end up happy with your house. The property was, all the inspections were done, disclosures were done, so you know everything about the property appraised of value or more, and you already know when it comes to your loan, you already know how much it's going to cost you, how much is your payment, and what are the fees. So you're good to go. Last thing, you just get your keys and you're done. Hopefully, this information is helpful. Take into account the whole idea of this video is to let you know that you do have options. Once the property is in escrow, you do have windows in which you can cancel. The contracts are set up that if you're not satisfied with the process, you can cancel. But there will be costs associated that are non-refundable that you need to know upfront. And also that your deposit to a certain point. A lot of people in my career, when I talk about they bought a property, so oh, you know what? And I ask them, how old was your deposit? Well, the agent never told me that my deposit would have was a risk. Ultimately we closed and everything was fine, but they never told me. It wasn't in my case my deposit was at risk. It just happened that they didn't. Nothing happened out of the ordinary that they would cancel, but their deposit was at risk. So I think it's if it's not my money, if it's your money, I think it's important that when someone's guiding you in this process, that you know all the ins and all the outs. All right, this is Jair, and thank you so much for your time.